Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Spencer.
Good morning. Sorry about that. I did the old mute trick. How's it going, everyone? Welcome to PreMarket Prep. I am Spencer Israel here with Joel Elconin and Dennis Dick. Got a good show for you folks today. A couple of guests on the docket. First will be 8:15 Michael Pachter. He's an equity analyst at Wedbush Securities. Followed by Tommy Lackey at 8:35. We're going to talk through Pachter's coverage universe and Tommy Lackey's charts as we always do. Before we get to that, though, we got to get to the movers of the day. Tesla called the upgrade from Piper Jaffray. Got a few other ratings to note, and we're going to cover Barron's if we can get to it. They have a nice little article there about 6 undervalued energy stocks and 5 ways to play the gold rally. But first, Joel, how was your trip?
Very good here. Had a little bit of a road trip to Syracuse, trying to anticipate the flight being canceled, but we'll talk about that with Dennis when he comes on here. S&P futures are in the green here by 275. Just about a 10-point range, found support at 23.49.75, so we'll keep an eye on that on the downside. But more important, we got some levels to keep an eye on the upside. Thursdays and Fridays high right there at 23.61. That's the key for today. That's key for the entire week. We'll keep an eye on that. We have crude trading up 62 cents at 52.86. Nice rally here. Just getting into that 53 handle. Current high 52.90. Gold and silver in the red. Gold in the red here by $6.30, hanging out at $12.50. And silver in the red by 30 cents here at $17.84. Good morning, Dennis. How you doing?
Doing pretty good. Connor McDavid got 100 points over the weekend on the last game of the season, so I'm pretty happy about that.
Yeah, and Edmonton's probably in the playoffs for the first time since
first time in
1970.
10 years. I don't even know how to deal with it. I've dealt with losing for so long. I don't even know how to deal with winning. People like text me and say, "Oh, congrats on the Oilers getting in." I was like, I don't even know how to deal with it because I'm always just used to losing. So
Dennis, I'm all aboard the Oilers, the bandwagon. Choo choo. I'm all aboard.
Why are you an Oilers, or why are you cheering for the Oilers?
I don't know, dealing with you every day. I'm all aboard.
All right, everybody, jump on the bandwagon, the Oilers bandwagon. We'll probably get swept in 4, but hopefully McDavid can pull them through. But Joel, interesting choice you made there on Thursday. I was like, he texts me and he's like, he's got the flight out to Syracuse Thursday night, but he's like, it's supposed to storm. I know they're going to cancel my flight. I'm going to drive. So tell us about your thought process here. It's the trader in you for sure that makes a call like that, trying to call it ahead of time.
I was wrong. Just like a few
of my... Flight did not get canceled.
The flight did not. Every other flight, the flight ahead of us was delayed to Syracuse by 4.5 hours. Flights from the East Coast were canceled right and left, coming from the south because of winds and weather. They were predicting 25, 30-mile-an-hour gusted winds. I said, Emily, come home from school. Road trip. We got in the car. It rained 7 hours and 15 minutes on an 8-hour trip. But made it to Syracuse with Emily. Went out for a nice dinner when we got there at 10:30 at night. And what a great campus. What a great school. I may be enrolling in the Syracuse broadcasting program.
There you go. So it ended up working out at the end of it, even though you decided to have the long road trip.
Long road trip, drove back on Saturday, and then Emily was honored at Michigan State yesterday as one of the top students in the journalism program.
Oh, congratulations. Wow.
Yeah, so I got back in the car for an hour and 15 minutes. So been spending a lot of time in the car, but glad to be back behind the mic here. Just looking at the trading action from Friday, Dennis, I was watching it on my phone as we were touring the campus here. And it just seemed like it was just chop and slop there.
Yeah.
How was it from your perspective?
Yeah, exactly that. You know what? That's the first time I think I've actually tried to call a choppy day on the show. And we were saying, with all this information, such a mixed market, I was like, this could be a really choppy day. And you've got to trade choppy days differently than you're going to trade, something that's going to be a follow-through day or a momentum day. But if you can call a choppy day ahead of time, you can make some money with it because you're just fading moves. So instead of, when something starts to look like it's going up, you sell it instead of buying it. When something starts to look like it's going down, you buy it instead of sell it. It's kind of how it works trading a choppy day. So, fading the moves is the key thing to do when you're obviously trading on a choppy day. And, sometimes you just get, days that, information's mixed. There's no real leader in the sector. And that's your indicator that, hey, maybe, there's not going to be that much follow through here. You look at the charts, even if you look at the S&P charts, we've kind of been chopping around here in the S&P, really, Joel, for the last couple of weeks. I mean, there has been, a little, a day or two of rally and then a day or two of sell-off. But really, when you sit back and look overall, even the last month in the S&Ps, it's kind of been chop.
Yeah, and just hanging out in a 2350 handles where most of the chop and slop's been. I talked about the 50% retracement, 2358. That's from the whole break you had, 2398 down to 2317.75, and we've really found a home here. I thought on Friday, as I was driving out there on Thursday, I'm like, oh, we got a little war action going. Well, that should really shake up the market. It sold off overnight, but it came right back and just really in a trading range. I think when we have Nick on tomorrow, I guess if you're an option writer, selling those iron condors and stuff out of the money, the premium is just evaporating every day as the market decides what direction to go in.
I mean, and you can look here in the next couple days. We don't have really any earnings, of note coming up here for the next 2 days. So maybe it's still more, chop until we start to get, to Thursday, where you're going to start to get some big reports coming in. Basically, start of earnings season. You could say Wednesday with Delta, but really Thursday. Let's look at the guns. J.P. Morgan, Wells Fargo, Citigroup, all going to report. So you're going to start to hear from those financials. The financials were the leader, towards the end of the year, but they've kind of been the laggard as of late. So very interested to see, how these reports, how the market responds to the report. Because honestly, it's not all the time just about the report itself. It's about the response to the report. Because sometimes, a company can report good earnings and they can hit the stock on the good earnings. But, I'm really interested here because I think the market, is trying to figure out, do we want to buy these financials? We seem to be in a rising interest rate environment, but we don't know for sure. There is some political uncertainty. But, you look at the last month in JP Morgan, stock was up near $94. Quietly has sold off to 86. So you're talking about a little quiet 10% sell-off in J.P. Morgan. Bank of America, same story. Stock was up at 25.5 down to 23.20. So you're talking again about a 10% sell-off here. Citigroup is not off nearly as much. It got up to only 62, but it didn't run up as much either. It's only off about $3 on the highs. So you look at these and you think, okay, well, some of these stocks have sold off a little bit ahead of the reports. Maybe I'm going to be more inclined to buy them. I think it depends, though. A couple more days of information. Let's see how they trade ahead of the report, because sometimes these stocks do run up ahead of the report. But really be interested to see the response to the earnings.
All right, then one stock that has not been able to get off the mat here. Look at the consolidation in Goldman Sachs here. Not much of a bounce off the lows, just hanging out just above and below the $230 level. I think I can give you a couple double tops here in Goldman Sachs here, or just one double top. I guess it's two. Really range bound here. The 2-day high, though, is 230.12. So if you want to use a round number. But, yeah, financials have just been quiet as of late.
Yeah. And, well, not even quiet the last few days, but the Goldman, you look at that just 3 weeks ago. We're down over 10% Goldman here, too. So, just because the market's not down significantly doesn't mean some stocks haven't been hit. So, is this a buying opportunity is the question. What are your thoughts, Joel? You pulled back here substantially from the highs. Maybe it was a bit overdone when we got up to over 250, making new highs on Goldman Sachs. But what are your thoughts here now as you sit at 227?
Goldman Sachs here, if I was trying to pick a bottom here, I'd have to stop myself out if we made a new low of the move at 220.85. That's kind of ways down there. I think on the upside, though, if I was going to buy it on strength, I would have to wait for it to clear 235. I know that's a ways away. 234.64. Basically, you had the 234.64 spike and the 221 low spike, but besides that, it's been like 225 to 232. So rather wait for a breakout or a breakdown. I mean, interest rates are supposed to go up a couple more times this year. You got earnings season. The trend is your friend. So if you're going with the trend, this is a healthy pullback and one to buy.
Couple of ratings changes, and we'll get into the detailed ones after we get Michael Pachter, who's going to come on at 8:15. But let's just jump to a couple of the big guns who are getting ratings moves here today. Start with Amazon. They are getting upgraded here this morning at Needham to a buy. Price target 1,100. Again, this feels like chasing price totally. I mean, here's an analyst. I'm not sure where they came from here, but it's been a big move here in Amazon. But it was maybe Guy Adami on Fast Money. Somebody on Fast Money on Friday night was making a good point here. And I'm not sure if it's Guy, but somebody on Fast Money was making a good point. They're saying if you look at Amazon though, and you really look at it over the course of the last 6 months, we were at 845 back in October. Now we're looking at the stock at 894. We're only up, 50. Like it looks like a big move as of recent, but really when you put the full move in perspective, it hasn't moved that far. It might have been Carter Worth. But somebody was saying, about Amazon there, breaking out above the 860 level and saying, there could be some room to go here.
923.72. That's the all-time high. You have to see what happens.
We pulled back for 3 days.
Yeah, pulled back for 3
50%?
days. It depends where you figure the move from. But
maybe for the breakout. Let's take it from the breakout, the 50%. So say 860 up to, you're good at this, Air Joel. 920, what is that?
60.
So 60 points, 30 points.
Yeah, 890. 890.
Yeah, you're coming in that realm. 889, the low on Friday there. So you're in the vicinity of the 50% pullback of the recent move.
You know what I think I'd use instead of that? I think I would use just 900. 909 was Friday's high. Just a psychological level.
Yeah.
Let the push and pull go above there. Just remember, too, it got hit when you had that spike down. That was off earnings report. They took it down, and then it came right back up. So, I don't know. Let it play around 900. I'm sure you see some yo-yo action around that level before the earnings actually come out.
Yeah, I mean, the one thing to consider, on this stock, obviously, is it's a wild child for one thing. And then, one thing you've always taught me, it's better sometimes to buy a stock when it's going up as opposed to it's going down. And if it gets back up and claims over that 900, then you got the momentum on your side. And we're not talking about, just a hiccup above it there. You need a close above there. You need to look substantial here. I want to see what they do with this because, you had a couple weekdays. Now you get the upgrade that's helping it out. I think 900 maybe is your first resistance point there. Let's see if it can get above and get a close above 900, and then maybe it gets more interesting. The other major stock that obviously we follow and getting an upgrade here this morning is Tesla. And this stock has just been an absolute monster and continues to be a monster. Piper upgrading the stock to overweight here this morning. Spencer, did they give a price target on this? TSLA? Because I see it trading up 6 points.
Well, they raised it. It was 223. Now it's 368.
Whoa. Chasing price just a little bit here. 368, that's a big bump. So stock is in this morning here making new all-time highs. Joel.
304.88. That was your former all-time high, and that was a double top as well. Pre-market high comes in at a nice round number of 310, trading at 309.01. I think hard to find any resistance in this thing, but if you do come back, pull into that former double top at the 305 area, it could act as that as support. In order to fill the gap, though, from Friday's session, it looks like you need to get down to 302.54.
Yeah, the stock has been a monster. I've had this wrong, I'll say it, but I'm not chasing price. So I'm not coming up here and buying the stock. I'm not coming out here getting bullshit. I mean, from a short-term trading perspective, it's a breakout here again. So I definitely don't want to be short it, but, I've had this one wrong. I just saw from a valuation perspective, I feel like it's still ridiculous. That's why it's not going in my investment portfolio. But, man, you cannot argue the momentum in this issue.
All right. Do we want to comment on this merger at all, or should we go to Tom?
Let's go grab Pachter first, and we'll talk the merger afterwards. But we're going to go grab our first guest of the day. That's Michael Pachter, senior analyst at Wedbush Securities. So we'll be right back with Mr. Pachter.
Welcome back, traders and investors. Having a few technical difficulties here contacting Mr. Pachter. We'll try and get him on here in a few minutes. S&P futures trading up 275, 23.55. Seem to really like that level there. Haven't moved a whole lot. Spencer, what direction do you want to go from here?
Well, let's hit this merger that we're having this morning. Swift Transportation, SWFT, and Knight Transportation, KNX, are merging. The deal values Swift shares at $22.07 per share. This is a report from the Wall Street Journal.
All right, not much of a premium being paid here in the trucking. No, not at all. 20 bucks, 20.02 was when it went off the board. Currently trading 22.93. What'd you say the takeout price was, Spencer?
I said it values Swift at $22.07 a share.
All right.
Is that an all stock deal?
I don't know. I'd have to go into the article. Give me 1 second.
It looks like it's an all stock deal to me because if it's $22 and it's trading at $22.90, it's probably based on stock because KNX is actually bid up here in the pre-market as well. KNX is up at $31.45, so that's why you're seeing a takeout price over. I would assume it's all stock, and that's why it's trading above the takeout price.
It's all stock.
Is there a ratio there for a risk arb trades? You often see a ratio. Look at so many shares.
There may be, but it's it's fine.
Okay.
Spencer will try to find that paywall. So.
All right, Spencer will try to find that ratio for you. We'll go digging here. If somebody else knows the ratio, let us know. But Swift and KNX joining up here this morning. Obviously, Swift trading up.
I found it.
What's the ratio?
Swift stockholders will hold about 54%, and Knight will get 46% of the combined company.
Okay, when they join up, so 54 and 49. Okay, so there you go. And KNX here trading up in the pre-market as well. Has not traded a lot of stock, but it is bid up at 31.45. So it looks like kind of a merger of equals here, I guess. And in this case, looking at the Swift technical trading here, obviously when mergers are happening, you got to look at the combined company to really figure out the ratios there. But up 13% here in the pre-market, so Swift looks like it's benefiting a little bit more than KNX.
Equal merger of equals, equally bad charts here. So look at these things.
Joining up to try to cut expenses.
Yeah, I mean, I don't know. Are they planning on bringing in the the automated drivers and the truckers? Because we'll see.
Remember the Simpsons episode? Spencer, do you remember the Simpsons episode where Homer takes the sleeping pills and then he takes the wake pills or whatever. Anyways, he's got a truck. It's him and Bart. They're driving across the country. I don't know why he was with the truck. Anyways, he stops because he's getting tired, or he needs to sleep a little bit. So he takes a sleeping pill, and Bart's like, "Well, you fall asleep behind the wheel." So then he takes all these wake up pills. So then he's driving the car, and then he's like, "Oh, wake up, wake up, wake up, wake up, wake up." And then he's like, "Oh, sleeping pill's kicking," and then he falls asleep behind the wheel. And then what happens in the episode is the automated driving function kicks in. And so Homer wakes up and he's like, "Oh, I fell asleep behind the wheel. We must be all dead." And then he realizes, "Oh no, the automated driver kicked in." And then there was this whole big to-do because the automated drivers were in the trucking industry, and all the truckers didn't want anybody to know their secret that there was an automated driving tool on every truck in America. So then the truckers were trying to hunt down Simpsons. Great episode if you guys remember that one.
A peek into the future here, right? With
automated drivers. The Simpsons calls everything. They call Trump as president, and they're called automated drivers in the trucking industry.
All right, let's go. Let's go back to we were covering some ratings there before we were trying to get Mr. Pachter on. What rating should we go to next?
There's a bunch of other ones too. So let's jump over here. CY. It's a stock we don't talk about a lot. Cypress Semiconductor on the show, but it is catching an upgrade this morning to buy at SunTrust here. Stock is trading up 1.5% in the pre-market. It was a nice candle on Friday. CY after having 5 or 6 down days in a row, nice green candle. A little 2-day move for you here because it's going to kickstart. I'd say if you're looking though, and I'm looking at this technically, maybe if they get $14, let's see what it does there. Just quickly 15 down to 13, 14 would be the little quick 2-day retrace of the recent 7-day slide. So what are your thoughts, CY?
I have to agree with you. Just over $14, $14.07 and $14.13. There's a double top. But,
and we are rigging to Mr. Pachter now, by the way. I should probably jump in and say that. So we're going to grab Michael Pachter.
Michael Pachter, you're live on Benzinga's Pre-Market Prep Show. How you doing this morning?
Good, thank you.
All right. Sorry, a little trouble dialing you here. Michael Pachter is an equity analyst for Wedbush Securities, experienced equity research analyst covering digital media companies, digital media retail, internet companies, and also the host of the Pachter Factor. Let's just get right into some of these stocks here that you're covering. And one that hasn't been getting a lot of love on the street, GameStop. You're currently a buy rating and $28 price target. I know you've been have had a bullish thesis on it now after the last earning report. What's your update on GameStop?
We just haven't downgraded on the way down. I mean, my target in the last 6 or 7 months has gone from 36 down to 26 or 25. I've forgotten now. I just don't kick stocks when they're down, but these guys are definitely down. Their core game business is declining faster than I had expected, so hence my price target going down. Their new businesses are not growing anywhere near as fast as the company committed that they would, and it kind of throws into question why they borrowed close to $1 billion to buy a bunch of AT&T stores when they're barely throwing off $100 million a year. So it's not only got to pay back the principal on the debt that they have over $50 million a year in interest expense. They're just not generating enough pre-tax profit to justify that. Either they're going to have to turn those AT&T stores around and start generating a lot of profit in a declining business, or I think that the core games business decline is going to bury them. So again, I think you might make money this year because we have pretty good hardware launches with the Nintendo Switch that came out in March and the Xbox Scorpio coming out this fall. But it doesn't look to me like you can make a long-term bet on the stock. So I do think the stock goes higher, but only by about 10% or so to our target. And then I really question if they can start to make those carrier stores profitable.
Yeah, Michael, you brought up the Xbox Scorpio. I wanted to ask you about that. Do you have any projections or opinions on the launch and whether it will take away from PlayStation or be a boon for Xbox? Or I think it's the third console Xbox has launched since the One. Do you have any thoughts on the Scorpio?
It's a mid-cycle upgrade. So both Sony and Microsoft have tried something different this cycle. Prior cycles, you would just have redesigned consoles that were the same inside, same power, same graphics card, same CPU, and they were redesigned because they had a smaller power supply or a smaller cooling unit in the box. But they were essentially identical to prior versions. I think Xbox probably had 7 of them, Xbox 360. PlayStation had something like 7 of them. This cycle, we're getting a completely redesigned console with a much faster CPU and a much more graphic-intense GPU. So we're going from 1080p, which is 2 million pixels, to 4K, which is 8 million pixels. It literally has 4 times the graphic capability and possibly more if the CPU runs at a faster frame rate. So you're looking at a much, much higher output. The question is, what's going to happen with software? And the reason I call these mid-cycle upgrades is that both Sony and Microsoft, Sony had the PS4 Pro this past holiday, Xbox Scorpio this holiday, are requiring developers to make games that are backward compatible to the existing console. So anything that comes out for Scorpio has to work on Xbox One or it won't be approved. No one can make a game that only works on Scorpio. So what developers are doing is they're creating games that work on Xbox One, but you can essentially, if you pop the disc in, the box will recognize that it's higher definition and will output higher definition. Pretty much the way a Blu-ray player will actually read a standard def DVD. You can put it in a normal DVD and the Blu-ray player knows, and it won't put the output at Blu-ray. Same thing with these things. The box will know if you have an old game. So the point is that there's no truncation of the current cycle. You're not going to have all of your old games suddenly obsolete, and there's no reason for a consumer to feel they have to throw away their old Xbox or their old PlayStation and buy one of these. And that means that the uptake is far more gradual. That's what we saw with PS4 Pro. So the answer to your initial question, what are my projections? Tell me what the price is and how many Microsoft's going to make, and I'm happy to give you a projection, but we don't know the price. If it's above $400, I think they're going to have trouble taking much share from Sony. The PS4 Pro is $399, and I think if the Xbox Scorpio is $499, then I think that Sony shouldn't worry at all. If the price is $349 or $299, then I think the latter price is highly unlikely. But if it's cheaper than the PS4 Pro, yes, I think they'll take some share. Keep in mind that Sony is outselling Microsoft about 2-1 globally, and Sony is very slightly outselling them in the U.S. They're probably about 10% ahead in the U.S. So Microsoft, I think the Xbox is a U.S.-centric console. We have a U.S.-centric view that it must be great, and in fact, Sony's killing them internationally. So I don't think this thing is going to move the needle for Microsoft unless it's priced very inexpensively, and inexpensive means below the PS4 Pro.
Michael, also want to ask you about the movie theater space. Last week you reiterated your hold on Cinemark Holdings CNK. You have a $45 target on that, and a $26 target, and a buy rating on RGC, Regal Entertainment. Give us your overall thoughts there on that space.
Well, Cinemark, we missed it. I mean, it's certainly done really, really well. The stock's up from the high 20s to the low 40s in the last year. So my hold is more a reflection that I don't think there's as much profit to be made here. They've got a heavy concentration of international theaters in Latin America. Over 25% of revenue comes from Latin America. That region has been under a lot of pressure economically. Foreign currency's been a headwind. Their per-screen averages have done great, but I think that uncertainty in Latin America remains an issue for me. And Cinemark is ahead of Regal in retrofitting its theaters and putting in recliner seats and making the theater experience better. So the reason we favor Regal over Cinemark is Regal's been slow to improve its theater base. It is doing so now. It has been for about the last year. So those newly reseated theaters are going to hit this year, and this is a big year for box office. So, what that does for Regal is it gets occupancy up, and it allows them to charge higher ticket prices. So I expect Regal to gain share over Cinemark for all of 2017 and into 2018. Historically, Cinemark has captured more share than Regal. So again, I think it flips around. I think Regal catches up. That's the real difference in our ratings.
Michael, Dennis Dick here. Pleasure to have you on again. Stock you've been bullish for a long time here. Amazon, you got a buy rating on this at a $900 price target. It's now got up to your price target here finally there. Michael, is it time to go up here again on Amazon? Because this stock just continues to be a monster.
Yeah, it's a great question. And I was actually looking at that this morning. I just saw one of my former colleagues, now a competitor, raised his target. He upgraded them today and raised his target to 1,100. Kerry Rice at Needham. I suppose, it's really hard to value companies that trade on Ether. None of these internet companies, except the very, very mature ones that aren't growing very much, are trading at a normal earnings multiple. And, we're looking at, I've got a $6.73 earnings estimate this year. I'm sure the range of estimates may go as high as $10, but even with the $10 earnings power, to value a stock above 1,000, you're talking about greater than 100 multiple. Sure, I can do it, and I'm already over 100 multiple on my $6.73 target or EPS estimate. But it's really just a function of how much we think Amazon's going to grow. So I'm not yet prepared to raise my target. I'll have to give that some thought heading into earnings. But let me say that the right way to think about Amazon is to think about its market share in its two core businesses. First is retail, clearly, and the second is Amazon Web Services, or cloud computing. They are only, at about 1% of global retail sales. So they're really small in the scheme of overall retail spend. And the question is, can they get to 5%? Yeah, I think that's a very, very high probability. Can they get to 10%? Maybe. So there's a lot of room for retail sales growth here. On the cloud side, my math is they're at about 3 or 4% of total cloud computing spend. Is that going to grow? Because retail overall probably isn't going to grow very much in the next 10 years. But cloud will easily double and possibly triple the next 10 years. And if their share goes up from 3 or 4% to 6 or 7%, they're going to see double-digit sales growth on the web services side for many, many years. And that's a really profitable business. So putting a number on that is the hard part. Figuring out where that is in 8 or 10 years and discounting back is an exercise of futility, because no matter what I put out there, I'm going to be wrong. So the answer is, yes, I love Amazon. And yes, I think the stock can keep going up. The question is how much and over what time period, and I've got to stick to a 1-year target. So I have to go back and sharpen a pencil and do some work. I'm not quite there yet.
One stock we need to ask you about here, kind of the forgotten stock on Wall Street. Twitter, you have a hold rating and a $13 target. I believe that's right back where just around its all-time low. I mean, talk about a stock that had some momentum off the IPO, just dwindling here. Is there anything this company can do to know what seems like no one wants to buy it? They can't expand their monthly average users here. Give us your outlook on Twitter.
Yeah, they're really a pretty terrible company, and I don't think the product is terrible. I think that the management is focused on the wrong things. They don't seem at all self-aware. I mean, they don't seem to recognize that the way to grow Twitter is to get people who don't use it to try, and they haven't been focused on non-users. And I think that's really the problem. I mean, you guys remember that aha moment with Facebook when your mother started using it. And that's when you realize this is real. Like your spouse and your mother, my goodness, then this appeals to everybody. I doubt that any of our mothers are on Twitter. And I don't think our mothers even know what Twitter is or are interested in finding out. That's the difference between a great social media company and a not so great social media company. So until they figure that out, I don't think the stock can possibly work. I will give them credit. They lowballed guidance to the point where they probably are set up to beat in the March quarter. So people playing for a quarter are probably going to see, pretty good numbers. But regardless, you're looking for a sequential decline from December to March in ad revenue, and that's just seasonality in the ad market. Trump hasn't helped them, which is kind of shocking. Because he certainly made every effort to help them and uses Twitter almost daily. It amazes me that they don't exploit that. And if you look at their management team, if you look at all the officers that were listed in their annual report in 2015, the only ones that are left are the corporate guys, the general counsel, the chief accounting officer, the CFO, and Jack Dorsey. So every product person, every marketing person, the HR person, anybody that you would tech person, anybody you think about that was on that management team is gone, and yet I don't see a substantially improved product. So I think that they are a rudderless ship. I think that Dorsey is the emperor who wears no clothes and surrounds himself with people who tell him how fine his outfit looks, and I don't see how this company turns around until they gain some introspection, start to figure out what they need to do to change, and the way to change is attract non-users. And when I see that, then I'll like the stock. I haven't seen it yet.
Michael, real quick before I let you go, got to ask you about Netflix. You're one of the biggest bears on the street. Something to be said for going against the grain. What has to change at Netflix for you to change your view?
Well, I have to be real here. As long as investors are willing to pay for subscriber growth, and as long as investors are willing to pay for a Netflix-created concept called contribution profit, the stock's going to keep going up. So, yes, they are growing subscribers, and we'll have a preview out shortly, but I'm very comfortable that they had a good subscriber growth quarter in March, and I'm very comfortable that their contribution profit's up a ton because they raised price late last year. So year over year, March quarter versus March quarter, you should see a substantial lift in revenue. And they don't amortize very much of their content spend. So investors are getting exactly what they're willing to pay for, which is subscriber growth and contribution profit. What will have to change for Netflix shares to go down, not to change my view, but for investors to give up, is the light bulb has to go on for investors that there's a ton of spending going on at this company, and they don't really have much to show for it. And when I say a ton of spending, if you glance at their balance sheet, there's a line called non-current content library. It was $4.3 billion at the end of 2015. It was $7.3 billion at the end of 2016. So there's $3 billion that sits on the balance sheet, supposedly for all this fine original content that Netflix is spending on, and yet, other than Stranger Things, you can't name an owned show that Netflix invested in last year that anybody watches. And don't say The Crown because they don't own it, and don't say House of Cards because they don't own it, and don't say Orange is the New Black because they don't own it. They own Flaked and The Ranch and a bunch of other crap that you've never watched. So the problem, I think, with Netflix is they're investing money like drunken sailors in shows that nobody watches, and investors are lapping it up as if that's the end-all, be-all, and they're going to monetize Flaked for the next 10 years because it's sitting on their balance sheet. They're not going to. And when investors figure that out, the stock's going to go down. So nothing's going to really change my mind unless a bunch of these, what I consider to be crappy shows, start to generate huge returns. If people start glomming on to everything Netflix is producing and saying it's amazing, they're more talented than Disney, then great. I'm completely wrong. I am not saying that. Stranger Things is the only original that they own that I've seen any kind of results with. And we'll see if that can even keep it up for 3 or 4 seasons.
We've been on the line with Michael Pachter of analyst at Wedbush Securities. Mike, thanks so much for your candor as always. We'll talk to you again soon.
My pleasure. Bye-bye.
And as I bring in Tommy Lackey, Joel is going to give us an update on the market.
Probably the old mute trick on Joel. He's pretty good
Joel.
at that. He has to do it once a
Yo!
show. He has to do it once a show.
Up $1.50, 23.53.75. Just not moving a lot here, hanging above the pre-market low. As we're dialing Tommy, I see STRP popped up in the chat a little bit. Stock came hard off the 51.50 level. Base daily chart here. Let's see if we get any pre-market action. Not really. 36.56. Just kind of looking at this one. I think we may have 93. That can't be a right tick. Is that an odd lot? At $93? Holy mackerel. Dennis, you see this one? $93? A tripler here for Straight Path Communications?
Yeah, AT&T got a deal here for this. So AT&T to acquire Straight Path at $95.63 a share. It's crazy premium being paid here. So the deal, it's a small company. I mean, it's only a $1.6 billion deal, but holy cow, if you had this on Friday, this is obviously payday for you on STRP because the stock is getting acquired here $95.63 a share.
Unbelievable. Okay, Spencer, you're bringing Tommy in?
We're working on bringing Tommy right now, so bear with me a second, but we're getting Tommy.
All
bear
right.
with me.
Heck of a premium paid here. I'm not sure what.
Big time.
Wow.
Yeah, obviously, this is, on your leaderboard, this is right up there at number 1. Stock trading up 154% here. It's bid 92 at $94. So $92, $20 to $93. I think it is a stock. It's a cash and stock deal, I believe.
All
Morning,
right.
guys.
Good morning. We got Tommy Lackey on, managing partner, portfolio manager at Relativity Capital Advisors. Tommy, we got a little feedback in the background there.
I just turned it off. Yeah, I'm sorry. I was getting it off while y'all were calling. Sorry about that.
Okay. Tommy, let's just get to the market here. Choppy day on Friday in a trading range here, right around the 50% retracement. Basis the S&Ps here, Tommy. What do you think of the pause in action?
Yeah, I think that's all it is right now. I mean, I think anybody who wants to try to make it bigger wants a narrative more than anything else. You just got to wait and see what the price action does, and also realize that with this kind of a range, it might expand a little bit in one way and then fail. So just kind of be on your toes right now. But we certainly aren't overbought or stretched by any means. And if we go under the floor of say excuse me, to 234-ish, somewhere in that range, you start looking a lot closer.
And going to the nitrous scan here, big weekly consolidation in CLGX. Give us your technical outlook for that.
Yeah, CLGX was just one that came up on it, and you could just see that the weekly pattern is almost a couple of years old now, going sideways and almost coming up into a ascending triangle type pattern. And the daily has been consolidating right above its moving averages and on kind of a little back test. It tried to break out a week and a half ago, and then it just pulled back a little bit and then held all the important moving averages right there. So if it can move back over, I would say, Friday's highs, then it might be worth a shot, and then this one might catapult it up into. It's a lesser-known name, but it's starting to shape up pretty well.
How about a better-known name, Cheesecake Factory, back at December highs, trying to break out. And also, any comments on the Panera deal? Wow, what a run-up, and then a huge premium paid. Could Cheesecake Factory, with their huge portions, perhaps be the next one to go?
Well, that's one of the things that my co-manager Joe Kunkel at Options talked about last week. Is it's one of the ones that does tend to trade at a little bit of premium to peers, kind of like Panera did. So it might be one that's on watch. But yes, the Panera deal was a scenario to where big premium did really well. However, if you watched from about a week and a half to 2 weeks before it started getting a lot of bullish options activity that was kind of noting that some people were starting to get in the game and get interested. And you start to see those in these plays, and that's where a lot of times you'll be pre-merger type situations.
All right, another pretty well-known stock here, Skyworks. I know they kind of live and die by Apple here with their products, but what are the chart? Ooh, 102.64 here. Hit that on Friday. That was an all-time high. What are you seeing in Skyworks?
Well, it's basically consolidated across along the 8 and 13 EMA, which is a EMA a lot of traders, and that's exponential moving average, a lot of traders use. And it just popped out Friday on a day that was pretty benign in a lot of situations. So it looks like it wants to start moving again. And this may be one that from a long-term perspective, you're going to have some heavier resistance up around 110, those highs. But from a short-term perspective, that's a pretty good move from here to there.
All right, another one here in your filter. Well, STRP, I guess that one is a little bit history, but let's look at DICA, Discovery. What are you seeing in the charts?
DICA is at back at the highs. It's had a real strong run off the lows, and it's got some bullish call OI just above for April. And so it's one to watch here, but see if you back out to the weekly chart and look at this one, you can see that this consolidation it's been in has been a little over a year now, almost a year and a half. So moving over that 30 level could be significant for this particular one. Hey, I've got one for Spencer here. I got a question for him while we take a quick pause. Did you really just ask an equity analyst to answer a question quickly?
Yeah, I know. That was a huge mistake. Huge mistake. I figured I would press my luck. It didn't quite work out.
Well,
yeah.
Now you know. All right, sorry, back to it.
Let's go meltdown here, Tommy. A couple of stocks that are notable here. GWPH, a stock we haven't talked about on the show for a while. Stocks quietly had a little sell-off here. It kind of had the breakout day in March, and it was a breakout became a fake-out because that new high was quickly rejected there, and the stock's been straight down ever since, over 20 points off of those highs. What are your thoughts here on GW Pharma?
Yeah, it's right below a big volume support area. And basically, if it continues to move down here, you got 200 at 112, which it looks like it might want to visit. It's broken all the other moving averages, so why not? And then 110 looks like a pretty decent size level for this one as well, which was an old gap area back from September, October. And so looking at that one, basically I would probably let it come back in some because, this is two situations. One, it's a medical scenario, but it's also the pot play. And that gets a lot of people riled up on both sides. And so this one's going to run like it did, and then it's going to have a lot of back and forth, a lot of volatility. So I would say I'd wait till it either hits the 200 or gets back over about 118.
PAY, looking at this one here, stock has been selling off. There's been some stocks that have been selling off here in the last month, just quietly here. I know the S&Ps aren't down that much, but PAY is down significantly too. Started the month up near $21. Down here at $17.90 now. PAY, what are your thoughts?
Yeah, this one is one that I think near term, just the way it's run down and all this and where it's coming into, it should bounce some. It's got the 150-day moving average just below it, and it's just right below the 200-day average today. And so I think you could very well get a bounce. But if you get a weak bounce up into the 1850 area, like we've talked about before, low volume, doesn't look very impulsive, that kind of scenario, then this one might be a good short at that point. If it blows through it, then you just stay away, or you can go long if you want. Look both ways type of play. But I would more look for this one to head up there and then just kind of falter back down. And it's also got some pretty big bearish notable trades in it in the options market that aren't suggesting it's a break higher here is real likely.
ORLY, O'Reilly Automotive. This stock's been getting ahead. A lot of the automotive parts have been getting ahead. I was looking at AutoZone, and looking at advanced auto parts. All of those charts are ugly, and ORLY not looking that pretty either. Been down 5, 6, 7 days in a row here since it put on multiple highs up the 275 area. What are your technicals looking like on ORLY?
Well, this one's sitting on one of those really big ledges, but I also, to some extent, believe there's been an overreaction over the last week to 2 weeks on the whole auto situation. The numbers didn't come in quite as good last month as people wanted them to, and basically it's the typical first time they've kind of rolled over a little bit, so the sky is falling and everyone's going to stop buying cars. Now, not to say it's a perfect market and the loan market and all that is something to talk about, but overall, I still think there's a replacement market there that stays for a while, and I think this could be an overreaction. Now, that's my view, my narrative, but the reality is if this one breaks 252, it's probably going to head down to the 240 or 230 area to test.
Last one from the Meltdown, WDFC. Your WD-40 company, ugly day on Friday, closing down near the lows of 101.95. What are you seeing in the technicals in WDFC?
Yeah, I hadn't really looked at this one in a long time, but yeah, you flip back to the weekly chart and it's sitting on one of those ledges that me and Joel talk about a lot. But the problem is the way Friday's earnings and all that reacted right down here to this support, it might not happen in the next day or two because this big inverted hammer, they might try to eat that tail a little bit. But, anywhere between here and about 106, if you see, again, weak bounce that starts to fail, you might give it a shot with a stop out above 108.
Before we let you go, Tommy, a few stocks in the chat here. Rob Hood just threw in SYMC. I think that's semantic. He kind of characterizes that as sitting on a ledge as well. Boy, $30. Whoa, 30 to 31. Trade the range in that one. What's your thoughts on SYMC?
See, you're so different than me, Joel, but I think it's great. Because you said trade the range. I'm thinking just wait till something happens. Wait till it gets outside that. But, yeah, basically it's got to either get over that 31 level or break the 30 level. And, from all the activity I've seen in it and everything else, the over the 31 level is probably more likely.
Looking that way, too. The old Taser, which is now AANX. Any thoughts on that?
Oh, I had no idea they changed their symbol. That's the first thought. What did you say, AANX?
Yeah, but is that it? Is that correct? AAN.
Mine's not pulling that up.
No, that's not the correct one. What's the new symbol on Taser, Brentster?
Isn't it ABMD? No, that's not it. Let me see. Hold on a second.
It just changed it last week here.
It's
Taser.
Yeah, now I'm forgetting what it was.
It is, I'll give it to you, AAXN.
Okay.
Alpha X-Ray Nancy.
Okay. It's right at support, but it had a failed breakdown last week and then moving back to the top of this recent range. You got to let it get over this range. So you're probably looking at over 2360-ish would be a move. But the daily, Bollinger Band squeezed right up on it, and that failed break on, I believe it was Wednesday of last week. It's kind of interesting to see how high that volume was, then it moving back up. So again, if you can get over this range, you can go up there and close that gap just under 26.
All right, one more before we let you go here. Caterpillar upgrades and solid options flow. I mean, they seem to be shrugging off the rate of its offices. What are your thoughts on the cat?
Yeah, and I think that's exactly it. You know, the fact that they're shrugging that off anytime bad news, you start to get a better reaction. It's something to pay attention to. It just means investors are not seeing it as bad as the news does. What a surprise. But you see this one moved sideways for about a month off the 150 SMA, and now it's back above all the important moving averages. You know, again, you probably need to wait till it breaks over those Wednesday highs with that big tail, or comes back into around 93.
We've been on the line with Tommy Lackey. Joined us a little bit later today, but he's the managing partner and portfolio manager at Relativity Capital Advisors. Thanks for joining us, Tommy. We'll speak to you again next Monday.
Thanks, guys. Y'all have a great week.
All right, S&P's up 0.75 of a point, 23.53. Even Dennis, very quiet range here. Have you seen anything in imbalances that are noteworthy?
There is some big ones here this morning, just to know. Bank of America, 111,000 to sell. You've seen the financials. They were trading up earlier. They're starting to give it back here now. Wells Fargo did catch the upgrade there today. The Wells Fargo was upgraded Piper. But just looking at the financials overall are starting to leak here. Goldman Sachs actually went to the red here. Bank of America just barely holding on after being up pretty substantially earlier this morning. GE, 252,000 to buy, so that's going in the opposite direction, actually. And Ford, 151,000 to buy. ExxonMobil, 87,000 to buy. That's significant. Pfizer, 50,000 to sell. This flying through here. Twitter seems to always have a sell amount. 47,000 shares to sell on Twitter. That's about it. There's a few notable ones there. Otherwise, they're pretty mixed. I mean, it's always mixed on a day like this. And, I don't know if we're going to have a chop day here or not again. But, Friday was so choppy. I think markets just try to figure out where it wants to go here.
All right. For Downward Dog, it's AAXN. And it looks like 2350 is the level that you need to clear there with the name change. High on Friday, 2361. Another high at 2363. So gets above that, you could be getting up into the $24 handle. Spencer, before you have your Seder tonight, you want to preview tomorrow's show?
Sure. Well, that's not for a long 10 hours away, I suppose. Looking ahead to tomorrow's show, we got Nick Shaheen, as we do every Tuesday. He's our options guy. I'm sure he'll have a take on the Tesla upgrade from this morning. Other than that, though, that's it for us today. I hope you enjoyed our chats with Michael Pachter and Tommy Lackey, and we'll be back with you folks tomorrow. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Have a good rest of your Monday. We'll see you folks on Tuesday morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.